This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Before I introduce my co-anchors, I want to wish everyone who's, of course, celebrating the New Year a very happy New Year. It's, of course, Gudi Padwa, it's Ugadi, it's, of course, Navroz in different parts of the country. So, wishing you all the health, happiness, wealth as we look forward into the New Year. I'm Prashant. With me, my colleagues Nigel and Reema joins us today. Guys, hi, good morning.
Hi, good morning. Wishing all our viewers once again, may this year bring a lot of peace, prosperity, good health, and of course, success also.
Naveen Varsacha, Hardik Shubhecha. I hope I got that right, Reema.
Naveen Varsacha, Hardik Shubhecha.
Yeah, a little bit. But wishing everyone, Happy New Year. And, on the way to work, actually, you saw the festivities as well. So, let's see how trading action is. But roads were quite empty today.
Yeah,
Schools are shut as well. So
banks are shut. So
banks are shut,
bank holiday.
Clearing holiday.
So, absolutely. So I think it's going to be maybe, a little bit of effect of that, but that hasn't stopped markets, has it? A holiday here or there. Markets have looked very, very buoyant for a while now. So just quickly tell you where we left off yesterday. We left off at new highs. Not closing at new highs, but the Nifty hit a new high. The Bank Nifty hit a new high. And you also had the mid-cap index, which basically was hit a new high. Now, that's the backdrop, right? And things look pretty good. Overall, of course, market breadth was a little negative because mid-caps and small-caps underperformed. But that's just, we're looking at day on day. Now, U.S. equities last night were completely directionless. So S&P was flattish. The NASDAQ was, again, flattish. Nothing, almost as if the U.S. market did not trade. If you just wanted a cue from the index, nothing. U.S. bond yields, they continued to rise. The 10-year went up about 2 basis points. And that continues the move up that we've had from last week. We're at about 4.42. By the way, the 2-year, which is the front end of the yield curve in the US, is now almost at 4.8, 4.78 to be precise. So we've seen a big re-rating in the US rates because of course, data. We've had the third successive strong blowout jobs number. Of course, we got that on Friday. Markets reacted to yesterday. The big one this week, of course, is US CPI. We'll only get that tomorrow. And it's almost as if you look at what's happening with rates, markets trying to anticipate, front run the risk of perhaps a strong US CPI tomorrow because many got the labor market number wrong. Many were expecting the number to actually soften. Dollar index was down a little bit. That's good. 0.25% down, 104.12. Oil prices, this same time yesterday we were saying how oil was down a little bit. About 1.5–2%. It closed about 0.7% lower at 90.52. That's Brent. Now, where do we go from here as far as indices are concerned? It's a projection because we're at new highs in the Nifty. You could look at testing the weekly upper Bollinger Band, which is at 22,960. That's about 300 points away from where the Nifty left off yesterday. And on the way down, you can look at the hourly averages, but the big one is 22,303, which is the low in the current cycle. The Nifty Bank targets the same upper weekly Bollinger Bands at 49,228. We left off at 48,581. We should get to it eventually. By the way, the Nifty Bank took out the highs, but then did not close above it. So there is that as well on the way up. And on the way down, the 40-hourly exponential average stands at 47,980, which should not break, which should act as an important support. The GIFT Nifty will come up on your screen to give you a sense of how we're supposed to start. We had a pretty good start yesterday. Will we get a 90-point higher start, or will that moderate as we go into 9:15 or so? I would think the latter, but let's wait. Whether to see what kind of trading session we get from here. But 90 seems perhaps a bit excessive after the very strong run yesterday. Reema.
Well, some of the Asian markets are actually looking up. So, Hang Seng is up nearly 0.8%. The Japanese markets are up 0.5%. Straits Times, Singaporean market, that's up close to about 0.8%. So despite Wall Street closing absolutely flat and the sentiment remains subdued there, Asian markets have started Tuesday trade on a buoyant note. But, just want to put some more data points about the expectation of how many Fed rate cuts are we likely to get. The latest numbers are suggesting that the Fed funds futures contract are now suggesting only 60 basis points of rate cut, which compares with 150 basis points of rate cut that we had at the beginning of 2024. So 3 months in, and given the jobs data, the inflation print, rate cut expectations are coming down. The probability of a first rate cut in June now stands at 49% versus 57% a week ago, according to the CME data. And that US 10-year bond yield went to hit levels of 4.46 before drifting back to levels of 4.4. The CPI for March, which is expected tomorrow, is likely to rise to levels of 3.4%, which compares with 3.2% in February. In terms of flows, the DIIs bought nearly 3,500 crore in the cash market, while the FIs net sold nearly 700 crore in the cash market. But we've got two important block deals that we're tracking. One of them is Axis Bank, and the other one is going to be in Gland Pharma. So that could dominate, the flows action in today's trading session. But what are you watching?
Well, I think Nifty is on its way to 23,000 odd mark.
And the Nifty Bank to 50,000?
The Nifty Bank, that holds the key. But I think the Nifty is on its way, and I'll explain why, in further detail. Now, for yesterday's trading session, the Nifty did quite well. The Nifty Bank was a relative underperformer. In fact, it did see some selling from the top, while the mid-cap index underperformed. But that could be a technical factor that played out there on the Nifty Bank itself. Because the Nifty Mid-Cap Select Index, that played out weekly expiry yesterday. And Indian Hotels, that has the largest weight on that particular index. That's the Nifty Mid-Cap Select Index. And if you just look at the intraday chart on the Indian Hotels, you'll see that stock, in fact, it was all over the place. Intraday it fell, then it went up. So short point is maybe the mid-cap underperformance partly had to do with an expiry-related factor that did play out yesterday. So let's see how that goes, because the small-cap index did quite well. So that's why I'm just highlighting this. The highest weight on that index is Indian Hotels. So keep that in mind. Let's move on to what the FIs did in yesterday's trading session. They added close to on 10,000 long positions. They remained net short with close to on 55% of their positions on the short side. Moving to the options data then. Yesterday, the 22,500 put, very active in trade yesterday. So that's giving me the confidence that maybe, in fact, the bulls believe this 22,400, 22,450 level can hold out. But the bears that were writing this 22,500 call, they ran for cover. They are saying this momentum is moving against us. Let's pack our bags, let's move out. And that's why, in fact, we did see some unwinding at that particular strike, which brings us to the levels. Since 22,500 put is fairly active, well, the 22,450 will be the first level of support. If that breaks, then you're looking at the 20-day MA. On the Nifty Bank, yesterday's high becomes the near-term resistance, not too far away from where we closed. And in terms of a reference point, I'm looking at 48,300 because the 45,000 put, 48,500 put, well, that was fairly active in trade yesterday. And the ballpark premium is around 150 to 200 rupees out there. So that's why this becomes the first level of support that I'm looking at. Today, we'll also have the Nifty Financial Services Index that will play out the weekly expiry. So keep an eye out on that one, particularly to the second half of trade. The stock that I'm looking at today is JTL. Remember, in the last 1 month or maybe a month or so ago, there was some negative news flow that did come about on the stock. And that's why I did see a sharp correction. Now, yesterday, it hit almost the highest levels we've seen in the last 1 month or so. And the delivery data was fairly okay. Intraday, we did see a big spike. So it's now, in fact, at a crucial level. In yesterday's trade, it managed to end above the 20-day MA. Can it move to the 100-day MA, which is at around 230 odd mark? So for the time being, it's in that band. Last few sessions, it's gone to around 205, 203 odd. And from there, it's seeing a bit of a bounce. So let's see how it goes. Delivery was fairly okay. Volumes were high and it crossed the technical level. So we'll keep an eye out on this stock, whether or not it has more to go.
Okay, thank you. JTL Industries on our radar. Let's get to some equity calls then. Mahesh Nandurkar of Jefferies says, earnings growth will decline to a 5-quarter low of 7% year-on-year for the Jefferies coverage for the March 2024 quarterly earnings for banks and IT because they will decline. But he says domestic Exo financials are likely to post a 16% EBITDA growth as revenues will rise 11% year-on-year and margins are at an 11-quarter high. He adds pre-quarterly results suggest good cyclical trends with a 15 to 30% loan growth for banks and NBFCs, 20% plus pre-sales for property companies, and a likely 20% plus earnings growth for auto OEMs, pharma, and select cyclicals industrials.
Okay, well, that's the equity call. Our money market is shut today on account of Gudi Padwa, so we'll get you that tomorrow when we open up again. By the way, there are 2 holidays, bank holidays. I mean, there's Tuesday and Thursday as well, where banks are closed.